Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Renewed supply or selling pressure on the US dollar prompted the Australian dollar to reverse part of its recent weakness after falling significantly from the 60-day moving average, but still respecting the support area seen around 64.80-90. From the rebound, the market is now preparing itself for its next challenge, which is at 65.80 or 66 cents, also seen where the 60-day moving average is. From there, the market may extend on, which I feel could, and see a rise up towards 67 cents. In Australia this week, traders are anticipating the release of the inflation report, or the CPI, year on year, while later in the week, attention will shift to the Fed's preferred inflation metric, the Personal Consumption Expenditures Price Index. Market participants will closely watch these reports for insights into inflation trends and potential implications for monetary policy decisions. This update is particularly significant following the Fed's March meeting last week. Despite projecting 3 rate cuts this year, officials will closely monitor the update, which coincides with the market holiday for Good Friday. Traders widely anticipate the Federal Reserve will begin cutting rates in June, which should provide economic relief. This expectation arises as the Fed's main rate has remained at its highest level since 2001 for almost 8 months. Also this week, investors can expect further remarks from Fed Governor Christopher Waller and also from Chairman Jerome Powell, which will likely attract significant attention. Moving on to the euro, the market has respected that support area close to 107.70 and from the bounce looks towards that topside level around 108.55. That may progress on, which I feel should, to 109.60.65, or with the cap holding around 110 figure 15. Any pullback will likely to be shallow, as the US dollar index is slightly weaker, falling from 104.40 to 104.18. Moving on to dollar yen, the market is still a little bit apprehensive as it challenges that topside level around 151.75.80 and also seen where the Bank of Japan may intervene, or levels around this region has recently seen the market has plummeted from there. In light of the technicals breaking down, I do feel the market should potentially stage a significant down move and therefore look towards 150.5 and maybe onto 149.80.85. Reassess from there as we could see further losses. Any upside attempts should find high volatility, so continue to monitor your risk management in the event of whipsaw price action. Sterling also rebounded and now back on track. That could see a move on towards the region of 126.75.85 and still holding the view the market may actually recover most of these losses from the recent 2-day sell-off and put the market on focus to 128 to 129. Still respecting that key level of around 2,140, the market has staged somewhat mixed reaction over the last 2 days. And also from that, this spinning top has caused a little bit of a disruption in the bull trend. A bearish spinning top hand, which often signals high volatility and a potential weakness, still can see a move towards 2,140 to 46, so this should not be ruled out. But as previously seen from this base, the market has rebounded, so we should also not rule out the market from a challenge to that top side level of 2,188. So still confined in a tight range, so therefore the market will attempt to try and break out of one of these levels, but presently the technicals aren't giving too much away to support a broader term view. Oil rebounds and now looks back towards the recent objective of $83 a barrel. I feel the market may still continue to be capped there and therefore look for a retreat if challenged and look back towards the support levels seen around 79.80-90, and like gold also confined in a tight range, so no broader outlook is given at this present stage. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.